Hello everyone, welcome back to Simply Finance. The legendary investor Michael Burry has revealed his last portfolio's movements in his fund Icahn Asset Management. Let's start with his derivatives positions. TSLA puts have seen an increase in this last quarter, going from 800k puts to more than 1 million in just 3 months, remaining the first position. Puts are derivatives that intend to profit from downturns of the underlying asset. Just a small sum is necessary to control a large sum of such asset. Looking at TSLA's behavior since the beginning of the year, it seems the market has lowered its expectations regarding the electric vehicle manufacturer, what could lead to the success of Burry's thesis. His second position is Facebook calls. Calls are derivatives that intend to profit from appreciation of the underlying asset, and just like puts, only a small sum of contracts is necessary to control a large sum of such asset. FB's position went from 550k to 941k calls since Q1 of 2021, which shows us Burry's confidence of Zuckerberg's company is strong for the long term. His next position is TLT puts, which is an ETF that invests in US Treasury bonds and tracks their performance. His puts are explained like this. Bonds have an inverse behavior regarding interest rates, which means if interest rates set by the Fed go up, bonds prices go down, and vice versa. Burry's vision about the economy is that there will be inflation beyond what the Fed expects, so they will be forced to increase interest rates in order to control it, which will cause a crash in the bonds market. TLT puts have increased from 1.2 million to 1.9 million since Q1 of 2021, which reinforces Burry's bearish vision. Is his third position below Facebook calls considering its market value. His fourth position is GOOG calls, which went from 80k to 91k since 2021 Q1, showing us his confidence in the business model of the most famous search engine of the world. Google generates plenty of cash due to its low costs, and much of it is devoted to its startup adventures, such as Waymo, that don't generate any cash yet, but has the potential to be money printers. Maybe Burry identified in this company the feature Manish Pabrai talks about. Google might be a spawner stock. His fifth position is a new one, MSKESSON Calls, MSKESSON Corporation, a company that provides healthcare supply chain management, which means they transport healthcare supplies from manufacturers to sale points. Its revenue doesn't grow explosively, but they grow steadily, and MSKESSON is a major player in its industry in the US. There's no doubt we are in front of a solid company no matter in what stage of the economy cycle we are. His sixth position is KHC Calls, the Kraft Heinz Company, a company whose major shareholder is Berkshire Hathaway, which owns approximately 26%. KHC is owned principally by institutions and is famous enough to not need presentation. The company struggled some years ago when its revenue declined 36% from $11.5 billion 2012 to $7.3 billion 2013, but could recover to reach current revenue of $26 billion. Being an iconic company, it's sure Burry doesn't expect aggressive but steady growth and has increased his position from 1.1 million in 2021 Q1 to 1.4 million calls. His seventh position is WMT Calls, Walmart, but the surprise here is it's a new one. The reasoning behind this could be food retailers can convey easily inflation to its customers. No matter what happens, people need to keep buying their food. WMT is a big chain that has the power to negotiate advantageous contracts with its suppliers, and scale helps them a lot. His eighth position is CAH Calls, Cardinal Health, and is a competitor of MSKESSON Corporation as it also distributes healthcare supplies from manufacturers to sale points, and as well as that, is also a new position in Burry's portfolio. CAH has half the market cap of MSKESSON, so there's more room for growth. Since 2015, the company has increased its revenue healthily at a steady pace, so exercising those calls might be a smart move of Michael Burry. Icahn currently has 857k calls. His ninth position is CVS Calls, CVS Health Corporation, a well-known healthcare provider. CVS could be a client of any prior companies, MSKESSON, CAH, that we just saw. Its revenue has increased at a moderate pace, and Burry increased his position from 400k calls in 2021 Q1 to 525k. To finish his derivatives position, we find ARK puts, ARK Innovation ETF, a new position that caused huge surprise in the investment community. What Burry tries to tell us is straightforward. ARK, the fund managed by Cathie Wood, the spoiled girl of Wall Street, will inevitably go down. The thesis here might be a little different and could be less related to the fund's positions than to the management. Cathie Wood sold her Chinese positions in panic and repurchased them more expensive. What Burry watches here is a bad capital allocator and betted against her. Going to his stock positions, we can see Discovery Inc. as the biggest one. Here, we have a special situation the way Joel Greenblatt loves. AT&T is about to spin off his Warner Media division so it can merge with Discovery and create a new entity. Unlike traditional TV chains, Discovery is more like a content creator that can sell or lease what it produces to different platforms, such as Netflix, Disney+, HBO, or Amazon Prime, so the company can better adapt to times to come. Burry owns 855,084 shares. The second biggest position is Ovintiv, which is a company engaged in the exploration, development, production, and marketing of natural gas, oil, and natural gas liquids. It's a company recently bought, and the reason behind the purchase could be inflation Burry's predicting in the horizon. We all know commodities prices go up following inflation, which contributes to expand margins and profit. Burry owns 600,000 shares. The third position is GEO, the GEO Group, a REIT that owns and manages different facilities in the United States, Australia, South Africa, and the United Kingdom. REITs were one of the most affected industries during the lockdowns, and negativity surrounded them. However, this negativity has given, and continues giving, great opportunities SCORPIO seems to take advantage of. Burry owns 2.5 million shares. The fourth position is CVS, a company of which we talked before. Currently, Burry owns 200,000 shares of it. Shares and calls of CVS want a more bullish sign. The fifth position is CXW, Core Civic, a REIT specialized in the management of correctional and detention facilities in the United States. Biden expressed negative opinions about this type of business, and that could lead us to think the government will take a more prominent role in prisons. But let's face reality. America comes from an emergency situation, the increased debt levels, so being in charge of all costs associated to managing correctional facilities doesn't seem smart. So the most likely decision is to keep private centers. Burry owns 1.3 million shares. The sixth position is STNG, Scorpio Tankers, a company based in Monaco that transports petroleum products all over the globe with its ships. Considering inflation prediction, margins and profit of this company could expand significantly, but inflation or not, the world will still need its petroleum to keep working for some years, so STNG can benefit from this. Burry added shares from 190,100 in 2021 Q1 to 600,000. The rest of his positions are so small and represent such a tiny part of his portfolio that are meaningless regarding the overall performance of SCORPIO's portfolio. Taking a look at his portfolio, we see his biggest bets are on derivatives. TSLA puts market value is $730 million, rather than stocks. DISC market value is $24 million. Using derivatives and paying premiums is a strategy that limits downside and amplifies upside. We can't expect less from him.